What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market that looks terrible. It looks kind of recession-ish. Are we in a recession because of these tariffs? Yesterday was bad, today was bad as well. It says Dow dropped 1,600 points as U.S. stocks and worldwide sell-off after Trump's tariff caused a COVID-like shock. Like we haven't seen, well, the last time we seen a big hit on the market was in 2020 when COVID came on the scenes, right? So let's get into what the news is saying about today's stock market. Wall Street shuddered at a level of shock unseen since COVID's outbreak tore through financial markets worldwide. Thursday, on worries about the damage President Trump's newest set of tariffs could do to economies across continents, including his own. The S&P 500 sank 4.8% more than in major markets across Asia and Europe, for its worst day since the pandemic crashed the economy in 2020. Damn, that's bad. The Dow Jones Industrial Average dropped 1,679 points, or 4%, and the Nasdaq Composite tumbled 6%. Yeah, I saw it. So little was spared in financial markets as fear flared about the potentially toxic mix of weakening economic growth and higher inflation that tariffs can create. Everything from crude oil to big tech stocks to the value of the US dollar against other currencies fell. Even gold, which hit records recently as investors sought something safer to own, pulled lower. Some of the worst hits walloped smaller US companies, and the Russell 200 index of smaller stocks dropped 6.6% to pull more than 20% below its record. Wow. So investors worldwide knew Trump was going to announce a sweeping set of tariffs late Wednesday, and fears surrounding it had already pulled Wall Street's main measure of health, the S&P 500 index, 10% below its all-time high. But Trump still managed to surprise them with the worst-case scenario for tariffs, according to Mary Ann Bartels, Chief Investment Officer of Sanctuary Wealth. Trump announced a minimum tariff of 10% on imports, with the tax rate running much higher on products from certain countries like China and those from the European Union. It's plausible the tariffs altogether, which would rival levels unseen in roughly a century, could knock down U.S. economic growth by 2%. By 2 percentage points this year, and raise inflation close to 5%, according to UBS. Such a hit would be so big that it makes one's rational mind regard the possibility of them sticking as low, according to Banu Buwaja and other strategists at UBS. Yeah, Trump has previously said tariffs could cause a little disturbance in the economy and markets, and on Thursday he again downplayed the impact as he left the White House to fly to Florida. The markets are going to boom, the stock is going to boom, and the country is going to boom, Trump said. Wall Street had long assumed Trump would use tariffs merely as a tool for negotiations with other countries rather than long-term policy. But Wednesday's announcement may suggest Trump sees tariffs more as helping to solve an ideological goal than an opening bet in a poker game. Trump on Wednesday talked about wrestling manufacturing jobs back arresting manufacturing jobs back to the United States, a process that could take years. If Trump follows through on his tariffs, stock prices may need to fall much more than 10% from their all-time high in order to reflect the recession that could follow, along with the hit to profits that U.S. companies could take. The S&P 500 is now down 11.8% from its record set in February. Wow. Yeah. And it says here markets may actually be underreacting, especially if these rates turn out to be final, given the potential knock-on effects to global consumption and trade, said Sean Sun, portfolio manager at Thornburg Investment Management. Though he sees Trump's announcement on Wednesday as more of an opening move to an endpoint for policy. Trump offered an upbeat reaction after he asked about the market drop as he left the White House to fly to Florida on Thursday. He thinks it's going very well, he said. Of course he's going to think that. He's a billionaire with multiple companies, with long-standing money, right? We have an operation like when a patient gets operated on and it's a big thing. I said this would likely exactly be the way it is. Wow. Wow, 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 wow. One wild card is the Federal Reserve could cut interest rates in order to support the economy. That's what it had been doing late last year before pausing in 2025. Lower interest rates help by making it easier for U.S. companies and households to borrow money. Yields on Treasury tumbled in part on rising expectations for coming cuts to rates, along with general fear about the health of the U.S. economy. The yield on the 10-year Treasury fell 4.04% from 4.20% late Wednesday and roughly 4.8% in January. That's huge move from the bond market. So the Fed may have less freedom to move than it would like. While lower interest rates can goose the economy, they can also push upward on inflation. And worries are already worsening about that because of tariffs, with U.S. households in particular bracing for sharp increases in their bills. So the U.S. economy at the moment is still growing, of course. A report on Thursday said fewer U.S. workers applied for unemployment benefits last week. Economists had been expecting to see an uptick in jobless, and relatively solid job market has been the linchpin keeping the economy out of recession. A separate report said activity for U.S. transportation, finance, and other businesses in the service industry grew last month, but the growth was weaker than expected, and businesses gave a mixed picture of how they see conditions. Yeah, so Best Buy fell 17.8% because the electronics that it sells are made all over the world. United Airlines lost 15.6% because customers worried about the global economy may not fly as much for business or feel comfortable enough to take vacations. Target tumbled 10.9% amid worries that its customers, already squeezed by still high inflation, may be under even more stress. Yeah, this is big, people, what's happening. This is big. All told, the S&P fell 274.45 points to 5,396.52. The Dow Jones Industrial Average sank 1679.39 points to 40,545.93, and the Nasdaq tumbled 1,050.44 points to 16,550.61. In stock market abroad, indexes fell sharply worldwide. France, CAC 40 dropped 3.3%. Germany lost 3% in Europe. Japan sank 2.8%. Hong Kong lost 1.5%. South Korea dropped 0.8%. But we took a big hit here in the U.S. A big hit in the U.S. I mean, my portfolio, yeah, took a big hit. I say again, took a big hit. I'm going to keep saying took a big hit. Nvidia lost $7.49, dropping down to $94.31. Tesla lost 27.80. Did it lose $27 today? It damn sure did. Tesla lost $27.85 today, closing out at $239.43. Palantir lost $9.59, closing out at $74.01 today. Broadcom lost $7.72, closing out at $146.29. My information technology ETF lost $9.67 today. Damn, closing out at $142.45. And this stock had gotten up to $190. My SPLG ETF for the S&P 500 lost $3.79 today, closing out at $59.45. The market took a big hit today. Yeah. My portfolio has taken a big hit. So are we in a recession? But they're not calling it a recession? Because things are looking bad. It's looking bad. But that's the news. Here's the thing that I do know, right? Stocks are at an all-time low. When COVID happened, I jumped in the market, started buying stocks at an all-time low, and they went up. They're back down again. But I did make money during that time, and I will say I have still the losses that I've taken to my portfolio is the money that I made on my portfolio. So my principal amounts are still there. However, I've taken major hits to the interest and the money that I've made on my individual stocks and ETF, right? So I'm going to continue to invest, and I urge you to do the same. Stocks are lower. COVID happened. Things dropped. Every recession, the stock prices drop until things start to become balanced again, because there's no way things are going to continue to go down. But what I do know is happening is that there are a lot of people probably getting out of the market, which I believe is a bad idea because things are going to eventually go up. The rich created the stock market to make money. You know, they're not going to stay in this low place forever. It may go even lower, and I will still continue to buy stock. And if it goes down to zero, then the rich and the poor, we're all screwed. I don't think it's going that far. It won't go that far. However, it's happening, and so it's up to you to make a decision on what you're going to do. Either you're going to get in the market, you're going to get out of the market, or those of you who are not even in it, you're just going to stay on the sidelines and watch. Still, I urge you to get out of debt. Like right now, having such a big hit to your portfolio and not having your house in order, not having an emergency fund, not having any savings, not having a good solid foundation underneath you sucks at this moment. It sucks. So, you know, I'm still optimistic because I have things in place. I have my savings. I have my emergency fund. I have a job, right? I have things in place in case my job is no longer there. I will still be okay. You know, I've gotten into real estate. I continue to rent. I have other sources of income coming in, and I urge you to do the same. And also get out of debt. Get rid of that personal loan debt. Get rid of that college debt. get rid of that car loan debt, and then you can attack your mortgage, right? Your mortgage can be your last debt that you attack to get rid of, so that you can be 100% control of your money when you get it, right? So yeah, I mean, it is what it is. I've seen this before. We've all seen this before. It's affected us in some way, but it has yet to remain this way forever, right? How long is this going to continue to go on? How long is the market going to continue to go down? I don't know. I'm sticking to my plan. I'm not budgeting all of my money. I'm not putting all of my money in the stock market. I have a certain amount budgeted to invest, and I plan to stick to that budget. And I probably on Monday will invest a little more money outside of what I have budgeted, because I see like the S&P 500 ETF, my information technology ETF is a lot lower than what they previously were. And I believe that they will, at some point, get back up to those levels and exceed them. And so I'm going to make more money because I'm buying the stock at a lower price. And when it goes up, I have profit there. And then at some point, if I want to buy more real estate, instead of using my cash, I could take money out of my stockbroker's account to put down towards a house, and also use the money that I have saved. That's my plan. That's what my plan is for my money, because you can't take it with you. So you need to create and develop a plan for everything that you do. So what is your plan? If you don't have one, you need to create one. If you're not in the market, get in the market. If you're not going to get in the market, then continue to do what you're doing, whatever that may be, whatever makes you happy. So yeah, get out of debt. Disclaimer, I'm not a financial advisor, nor am I pretending to be one. So please consult with a financial advisor before you invest any of your hard-earned money, any of your money, right? Because any and all information on my channel is for entertainment purposes only, and it just reflects my opinions. So, all right, so you guys have a blessed weekend. Take care.